Inflation is off the charts. Well, it depends on who you ask. If you look at certain companies, certain industries, and certain countries, it's going to impact everybody differently. Today, I'm going to show you who is most affected by these interest rate hikes as we see inflation running wild, and of course, what this means to you. So let's begin by taking a look at the wholesale prices rising 0.4% in September, more than expected as inflation persists. So we could see that there's the producer price index, and then we have the consumer price index. By the time you're watching this video, you should already be seeing the consumer price index information coming out. As I record this, that hasn't come out yet. We're getting the producer prices or the wholesale prices. And the way that it works is that you would expect it to trickle down. So the wholesale or the producers, they are affected by input costs, maybe the raw materials and so on. So their prices rise, and as a result, they pass that on to the consumer. Now, it's not direct, but usually they kind of move in this direction, and we're seeing a rise there. So we look at also with core inflation. The Federal Reserve loves to use core inflation, which is not a real measure of inflation, but according to theirs, it is still elevated. These things are extremely important, even in their own little realm. We know that that isn't the case of actual inflation numbers, but we have to take what they give us and look at it and understand that stocks are moving based on this, companies are moving based on this, imports and exports and all of these other things within the economy. Fed officials are worried about risks of doing too little on inflation. You may have seen this. The meeting minutes came out from the latest FOMC meeting, and they basically said what we all expected them to say, that they have to do this now and tame inflation before it's too late. They've been all saying this, and in fact, I'll give you a couple quotes here from more governors and presidents of the Fed that are basically saying the same thing. We have to watch what happens, not just with the Federal Reserve, but of course, they are the ones at the front of all of this. Fed's Evans says fighting inflation is top priority, even if that means job losses. So we've been seeing this over and over and over again from different people in the Fed. Fed's Bowman sees sizable rate hikes on the table unless inflation falls. So roughly, I'm not going to quote every single individual, but these are the things that we are getting over and over and over again today. And then we have the impact of all of that, because just like the US, Canada, Australia, New Zealand, all these different places are basically doing the same thing, and that is tightening after years of easy money. Toronto picked as UBS's bubbliest housing market as prices drop. Bank ranks global cities most in danger of a correction spurred by rising interest rates and looming recession. So understand why. Because of the rising interest rates. And why is that the case? Well, as you see in Canada, you have a lot of people on variable mortgages. They did that, of course, to save money. As interest rates were going down, variable mortgage rates were lower. That's just the way it goes. You could see here, Canada's financial capital rose to the top position. Top position. I want to congratulate Toronto. All my friends in Toronto, number one. You are number one, according to the UBS research that was done here. They were the top position in the Swiss bank's annual ranking of real estate markets and the most in danger of correcting. Cities from Amsterdam to Tokyo also saw their risk levels increase. So you could see the list right here at the top. We have Toronto, then Frankfurt, Zurich, Munich, Hong Kong, Vancouver, Amsterdam, and it goes on. It is specifically indicating risk level, and that is extremely important. Because you've got individuals that have taken on way too much debt. It is so overwhelming how much debt they've gotten themselves into, and yet you've got rising interest rates. So when you look at the percentage of people in Canada that are on a variable mortgage rate, oh my goodness. I think I may have pulled that up here, but you can see that I believe it's 26% based on the data that I had seen last time. So 26% of those people are on variable. At the same time, in the way that Canada works, and I'm sure other countries work, is that you have this, like in the US, you get a mortgage, 30-year mortgage. You get an interest rate for 30 years. In Canada, it doesn't work that way. Yes, you pay it over a 25 to 30-year range, but you have to then essentially refinance it after that 3 to 5 year period. So you know that there's a lot of people right now, they're watching the things going up and they're going to have to renegotiate. Even if they get a fixed when time comes, they're going to get it at a much higher level than it was before. But the difference here is that they've got $1 million mortgages now. This is truly worrisome. And obviously, when you see in the case of Toronto, so many people have been on these variable mortgage rates, they're probably going to feel a little bit of a burn. We are witnessing the global owner-occupied housing boom finally under pressure. In a majority of the highly valued cities, significant price corrections are to be expected in the coming quarters. So it depends on how high interest rates are really going to go and will they come down fast enough, but that remains to be seen. Here we have it. That's the one I wanted to show you. Canada, unlike the US, has seen a big surge in variable rate mortgages. You could see right here, this is the variable rate residential mortgages outstanding in the billions, and that has gone above 500 billion, and that really skyrocketed here in 2020. You could see that in this chart, and I believe there's a couple others here. Just like in the UK, they expect this reset will lead to a big hit to household balance sheets. Okay. Furthermore, the Canadian economy is more directly exposed to real estate and finance than the US is. All very important stuff, but it's not just about Canada or the UK or what have you. Just look at the relationship between interest rates and the economy, and interest rates and growth and all these things. Interest rates are the number one thing, and that's why we have to pay very close attention to inflation data. Demand for riskier home loans is high as interest rates soar. So you could see this right here, just showing us that more and more people are putting down the minimum. They're going out there and trying everything they can to get those juicy deals, or so they think. US imports sink in September, suffer the steepest drop since 2020 lockdowns. Why do you think this is the case? Well, many are starting to say that the demand just isn't there. They were buying on their credit cards. There's this lie that we've been told that there's trillions of dollars sitting on the sidelines, and as soon as things turn around, that those trillions of dollars are going to make their way into the stock market. Now, that's a fantastic idea and it's all wonderful. But why is it the case that you've got an issue when interest rates start to rise a little bit and credit card usage starts to skyrocket? I think there's a little bit of a problem here, but they don't want to acknowledge that. You've got a debt problem, okay? And this is just showing us that there could be considerable demand destruction here at this time. PepsiCo's highest prices for soda and snacks test consumers' resolve. The maker of Pepsi and Doritos said its third quarter sales rose as prices increased 17% on average. So think about that for yourself. These are products that people are consuming all the time. And of course, as we see this, it's going to impact people's daily purchases, okay? Because maybe they're not going to be able to buy two of that one thing, they're going to have to just buy the one. Or because they can't give up their coffee or they can't give up their Coca-Colas and Pepsis, that they're going to cut from somewhere else. And that's just the way it goes. This is the way the US consumer is, the same with Canadian, same with Australian, UK, everywhere else. They're basically all doing the same kind of thing, and that is relying on very cheap monetary policy, very cheap fiscal policy coming through, easy, I should say, coming through to the individual. They're getting stimulus, they're getting social assistance, they have interest rates low so they can borrow where they need to, home equity line of credit, whatever the case may be. But as soon as that changes, then we see the direct effect on asset prices and the economy. we have this. I wanted to show you huge stuff because we're watching the prices of all these commodities rising, particularly when you look at natural gas and your gasoline and oil and all these other things. And you saw what happened to the Nord Stream 1 pipeline. Some are saying sabotage. Some are saying it's, just natural. Some are saying all these different things. Okay, I don't do speculation on this channel. What I'm showing you here is the articles just breaking that down, and yet another thing has happened. Leak found in key oil pipeline from Russia to Germany. Sabotage is not suspected. So in this case here, this is just Druzhba oil pipeline that links Russia and Germany. Officials say sabotage not expected. The cause of the incident is not known for the moment. Pumping in the affected line was immediately stopped. Line 2 of the pipeline is functioning normally. So we will see what happens along with Nord Stream 1 getting shut down. You look at Nord Stream 2 never even making it online. And then of course we have this. Putin claims Russia could send natural gas to Europe via Nord Stream 2. So you may have been aware of this. Essentially, just prior to the Ukraine situation, we had the pipelines basically finished, everything's ready to go, and then suddenly this, Germany basically says, no, we're not going to sign off on it, and then Ukraine happens right after. So it was interesting, coincidence, turn of events, whatever, but it looks like to me that he's saying, hey, you want your gas, you're in a deep scenario here, you want this to happen, let's make it happen. I don't think that's going to occur, but that's what we're dealing with right now. Putin announces his readiness to supply gas to Europe through the surviving branch of Nord Stream 2. So this comes from a translated article. I wanted to show you that because it's from the source itself, and so you could look at it if you are interested. Now, all of this to basically just talk about the fact that what we are encountering today is higher inflation, even if inflation is 0% month over month over month until the last remaining months here in this year, we would still be above 5% for inflation. And that means when you look at the Fed funds rate, it has to remain elevated. This is something that they cannot just do away with. People do not understand this. As a result, we need to talk about a few things. Let's talk right now about the central banks and what they're up to. Everybody has their eye on inflation. If inflation comes down even modestly, investors will believe that central banks are ready to pivot. And it's not just them, but of course businesses as well, because they expand their research and development. They do the stock buybacks. All of this is based on debt. If the debt is too expensive, they don't do it. Okay, next point is certain industries are more susceptible to interest rate hikes. And at the same time, certain countries are too. I use the example here in this video related to Canada with their real estate. People are getting more and more and more on variable. I believe Australia is as well, even more so. When you look at this, it has an impact. If people are in that business where they rely on cheap debt, well, then what happens when it becomes more expensive? You run into a very serious problem, don't you? Get fixed rates and fixed pricing on everything you can right now. If you haven't done it already, I've been talking about this for a very long time, but if you haven't done it already, do it now. We literally have no idea what can happen in the coming weeks, days, months, years, okay? We don't know. So you want that certainty in your life, and you can get that by getting fixed pricing and a fixed rate on anything that you can, okay? It's very important. You got to get rid of your variable, put that on fixed, and make that happen. I'm sure you can do it. I know you can. Have a business and or service that is considered to be necessary in tough times so a recession will not impact your income. A lot of people, they do real well. In my first book, I talked about the individual that's riding around in a Ferrari and then suddenly they're taking the bus. Okay, you don't want to be one of those individuals. You just want to progress through doing well, surviving and thriving. Okay, this is really what we want to achieve. But for many people, that doesn't happen because the risk is just so unbelievably high. And that's why we need to mitigate some of that risk. Did you appreciate this information? Well, if you did, I want you to join me tomorrow. And by doing that, you can click that subscribe and you'll do just that. I'll see you tomorrow. Take care.